you'll hit that millionaire milestone. And honestly, it's super risky. That's the most orthodox method and the risk is low, so I recommend it. Easy to win years. Hey, I'm Emma, with Wealth Builders and Tendencies of Those Who've Become Millionaires. I'm going to break down their methods into 5 key patterns that you can learn from. In this video, I'll be sharing the common traits I've observed from over 100 millionaires I've encountered. We'll explore the specific techniques they use to achieve their wealth. Even if you're thinking, that's impossible for me, I promise by the end of this video, you'll start to believe, maybe, just maybe, I can do this too. So stick around, and let's get started. So, there are all sorts of types out there, but when it comes to strategies, there's something you gotta watch out for. You know, things shift with the times, depending on the market's mood, and some stuff just doesn't work anymore. So, keep that in mind. Alright, so the first strategy we're gonna talk about is concentrated stock picking. Basically, you're looking at putting your money into like 1 to 5 stocks, really going all in, and aiming for those to double, triple, really boost your performance. Now, if you're aiming for that kind of profit, usually, you're thinking long-term, right? But, there are some folks who do this short-term too. They'll pick about 5 stocks with strong momentum and concentrate their investments there. They'll jump on stocks with killer post-earnings momentum, or ones that look like they're gonna crush it next quarter. We're talking about riding that momentum for like 1 to 3 months, flipping those stocks. This strategy was huge after the whole COVID crash. I've seen a ton of people around me become millionaires with this. They just keep buying stocks with that strong momentum. Then, there's the long-term play, where you hold on to stocks for a year or two, picking stable sectors, or ones that are gonna grow, and just letting them ride. That's the first strategy we're looking at. Now, if you want explosive growth, that 1 to 3 month momentum play I mentioned, that's where you get that compound interest kicking in, and there's no holding back. But, the basic idea here is to think long-term. Next is the second pattern. Diversification plus leverage investment. Overview of the strategy, it's about spreading your bets across a bunch of stocks, like 30 or 40 different ones, and then using a little leverage, 1.5x. I've seen a lot of people make serious money with this approach, even hitting the $1 million mark. Now, diversification is great, it definitely helps. But here's the thing, this strategy really shines when the overall market is doing well. I mean, if you hit a Lehman Brothers level crash with this, you're pretty much guaranteed to get wiped out. It's a strategy that amplifies your gains in a bull market. Think about it, during good times, you see tons of smaller stocks doubling or tripling in value, right? If you're diversified and using 1.5x leverage, you're gonna see some crazy returns. That's what's been happening the past few years, and that's why you see so many people making a killing with it. Okay, so the third pattern is long-term diversified investing. This one takes time, It's not a get-rich-quick scheme. So you're probably thinking, yeah, I know this one. It's like the tried and true method, right? Time in the market, consistently building wealth over years. I'm talking a decade or even longer for some folks. Even some of my friends who initially leaned towards concentrating their investments eventually saw the light and embraced diversification. So, what's crucial for this long-term, diversified investing? It's all about your deposit power. Your ability to consistently put money in every month. It's super important. Sure, you might glance at those top-tier millionaires and billionaires and get intimidated by the sheer scale of their portfolios, but let's be real here, that's not the reality for most of us. Let's keep it grounded. This consistent income-fueled approach is where the real magic happens. Most of you watching probably have jobs, so consider setting aside a portion from each paycheck or maybe even a chunk from your bonus. Consistently invest that money into a well-diversified portfolio, and over time, you're paving your path to that millionaire status. Seriously, it's the most achievable route for most people. And here's the beauty of this long-term strategy, your portfolio grows alongside your experience and market knowledge. Let me explain. Take the one-hit wonder scenario, for example. The market's booming, they strike gold, and bam! $2 million in the bank. Sounds incredible, right? But often, these individuals lack the necessary experience and wisdom to weather market fluctuations. So, they might have $2 million at one point, but then the market takes a nosedive, and they're back down to $200,000 or $300,000. We don't want to be those one-hit wonders. We want sustainable, steady growth. That's why it's so important to diversify. Invest a few $1,000 each month, maybe a few tens of thousands when you get a bonus, whatever you can consistently manage. Over time, your portfolio will expand, you'll gain valuable knowledge about different stocks and industries, and you'll develop a deeper understanding of the market dynamics. And when your knowledge, experience, and a favorable market climate align, boom, you'll hit that millionaire milestone. Now, look, hundreds of millions or even billions of dollars. Let's be real, that's a tough mountain to climb. But $1 million? That's totally within reach. Keep those contributions consistent, stay diversified, and you'll get there. Alright, let's dive into strategy number 4. Now, this one's a bit dicey, okay? We're talking about leverage concentration. The name itself screams danger, right? It basically means using leverage, borrowing money, to pour all your eggs into one basket. And honestly, it's super risky. In my circle, very few people have actually survived using this strategy. And well, the only ones I keep in touch with are the survivors, you know? Can't exactly chat with ghosts about their investment strategies, can I? Those guys are out of the game for good. So yeah, even among the ones who survive, some just get lucky once and then fizzle out. But the truly skilled ones, they ride the wave, and then they adapt, changing their strategy after that initial win. Now, with leverage concentration, if you've got, say, under $100,000 in assets, maybe you can stomach a bit of that risk. But if you're playing with millions, hoo boy, it could get ugly fast. Okay, so maybe if you lose it all and have a relatively small amount of capital, under $100,000, you can grind it out and earn it back. I mean, there are some exceptions. Maybe you've got like $10,000 or $20,000, and you're super knowledgeable about a specific industry and you are super confident in this one stock. Maybe you use 2x leverage and you can build wealth from that. Listen, this is a seriously dangerous game, and I generally don't recommend it. Alright, let's move on to strategy number 5, day trading and short-term investing. You know, especially in Japan, after the 2000s, online brokerages came out, commissions got cheaper, and trading became easier. So, there was an era where day trading was like the cutting edge. I wasn't investing yet back then, so I didn't experience it, but about 20 years ago, day trading seems to have been super popular. Since there weren't convenient tools like we have now, everyone was trading manually, you know? It's like a crazy era. Well, you know, it's like a method that was born from that era. It's not really a bug, but it's a method that doesn't really exist now. More like, now it's a difficult method. I think it's pretty high difficulty for the average person. There are people who keep consistently earning from day trading or short-term trading, but it's high difficulty, and with having a job too, a lot of people eventually lengthen their time horizon and shift to fundamental analysis. Alright. So, I've just introduced 5 patterns for becoming a millionaire, but how was it? I think there were a lot of pretty risky stories this time. For example, the long-term diversified investment using deposit power that I talked about earlier. That's the most orthodox method and the risk is low, so I recommend it. The patterns I introduced this time were just the big picture, so even within diversified investment, there are all sorts of methods. For example, there are people who aim for profit aggressively with short-term trading, even while diversifying, and there are people who take a long-term, steady approach and leave their investments alone. Even in day trading, there are people who do order book reading, people who do chart analysis. There are all kinds of people. There are really all sorts of investment methods. However, there's one thing you need to keep in mind. Those super skilled millionaires that you often see in the media. Those people are really outliers or abnormal values. I mean, if there were people holding assets worth 10 billion yen all over the place, the economy would be too good, right? It's not realistic to think that's normal, right? So, if you try to imitate those people thinking they're normal, you're gonna get burned. I get wanting to become a millionaire using the same methods as a successful investor you admire. But, you know, that method might be something that only worked in the past. And it might not be a method that suits you. The important thing is to find an investment method that suits your current self. For working people, I still think that long-term diversified investment with consistent deposits is probably the most orthodox method. Also, the speed at which you aim to become a millionaire is important too. Becoming a millionaire in your 20s. In your 50s. The goals vary from person to person, right? Looking at the world overall, the most common pattern for becoming a millionaire is accumulation investment. In other words, deposit power. Most of the people who become millionaires in their 50s and 60s do so by consistently depositing money every month while buying individual stocks, indexes, and so on. There are also people who become millionaires in their 20s, 30s, and 40s, but those people are really superstars. They're people who could have ended up failing if they had made even one wrong trading decision. Of course, they made it so far because they didn't make any mistakes. But there are probably many people who didn't reach millionaire status because of one small difference, so please keep that in mind, everyone. But, those people are really a small minority, and most people can only steadily accumulate wealth. So, throw away that naive idea of maybe I can become a millionaire quickly through short-term trading. And I recommend steadily investing. Also, the element of luck is important. People who become millionaires are people whose investment methods and the market luck at that time matched. Of course, ability is important, but it's also important to have been able to ride the market trends well. For example, if you were using leverage in short-term trading at the time of the Lehman shock, you would have been highly likely to withdraw from the market. But in the rising market after the coronavirus, it was easy for anyone to win. That matching of era and method is important. If you invest for a long time, there will be times when the market is super easy to make money in. If you have the knowledge and money prepared during those easy-to-win years, you have a high chance of increasing your assets all at once. For example, last year or the year before that, value stock investment was in super good shape, wasn't it? People who normally had around 15% performance suddenly had 80% performance. That kind of luck is also necessary to become a millionaire. In other words, timing, assets, knowledge, and then luck. All sorts of elements mesh together and allow people to become millionaires. So, please find an investment method that suits you while considering those things. In the end, preparation is what's important. Thank you for watching the video until the end. I'll see you again in the next video.